What's up, everybody? It's another week with the 9 to 5 investors. Sunday service getting started. As you can see, we got a full house this week. Mr. Smart Money, the host, co-host, Mr. Legendary, the Queen,
Truly.
Sean the Scalper. Then we got the surgeon over here, Big Net in the background. Trina, I don't know what her investor name gonna be. We're gonna come up with one. Mark and Willie. Everybody, we in here. Let's go.
Mark on his voice.
Oh, Mark, that's Angie down there at the bottom.
Mark Angie logged in by herself.
I don't think so.
Oh,
Oh, your name on
No,
that.
she's not logged in.
Okay, your name on that twice, man.
But we
Might have an infiltrator in there or somebody like that.
Infiltrator. I know you got an infiltrator.
Cat trying to keep y'all down. That's probably who that is. Like trying to infiltrate like Black Panther.
Yep.
Same old tricks.
Yep.
Hey, man, it's another week though. We're gonna go ahead and kick it off with the disclaimer.
Yes, sir. Welcome to the 9 to 5 investors. I am Mr. Legendary. We are the 9 to 5 investors are not financial advisors nor fiduciaries. Any information obtained through this video or any of our publications are for entertainment purposes and educational purposes only. The stock market comes with its own inherent risk. So please do your due diligence before making any moves and any decisions in the stock market. With that being said, we'd like to welcome y'all to this week's edition of the 9 to 5 investors meeting, or what we like to call Sunday service.
All right, y'all. So y'all know how we get started. We're gonna have a little talk about the weekly recap of the market this week and the interesting news anybody caught or picked up on. I know I've seen a few things myself.
Yep.
Yeah, look like tech still taking a licking. And look like retail trying to come back. Banks. I was trying to play a put on the brink on the banks because the Federal Reserve is kind of limiting their capabilities in some areas. So I figured some of their stocks would go down, but I may have missed it.
No. I don't think you missed it. I think
Still got time? Okay.
Yeah, you got time, I think.
And then
maybe they're gonna be down.
I evaluated a company, what was it? Michael Kors company. What's that company? It's the company that holds Michael Kors. I had to get the name. It's like CGMI or something like that. And I was trying to put a put on it. And I was talking to my other friend. He was like, man, you better look at the gap analysis on that thing. There's still some room for it to go. So I started out with 80. By the time I got my money back, it was 16. So I just evaluated it, so because I was looking at one chart, I thought it broke resistance. I was like, well, it's got to come down a little bit. Man, that thing kept on shooting up. So, but I just noticed the retail sector starting to take a hit, or starting to do well. Made about 600-700 off of Carnival playing the options, so that was straight. And other than that, I just kind of took it easy towards the end of the week.
I was looking at Carnival too.
Mm-hmm. Yeah, they did good. That was it for me for the week.
Yeah. Right now it seems we are in a rotation. We're seeing a lot of the money rotating. It's been going on for a couple of weeks now. A lot of money rotating out of the tech, the growth stocks, mainly the tech stocks. A lot of those companies was overvalued. So we're seeing a lot of sell-offs, a lot of profit taking, a lot of sector rotation, people taking money from the tech, moving it over to the re-entry stocks. He talked about Carnival Cruise Line, Marriott Hotels, Macy's been running. So that's what's going on. Also the energy sector, the traditional energy, not the renewable, traditional energy like the oil companies. We've been seeing a lot of money rotated into that sector as well.
Yeah, I missed on that.
And I
Financials
made
gonna
a
be
couple
on
dollars on Exxon. I was looking at Chevron.
Chevron. Yeah,
Mhm.
that's a nice play right there. But we was talking about tech being down. I've been noticing financials. I'm looking at the relation between tech and financials. Tech was down. Financials kind of had a little run, couple on here. They 52-week highs recently, and we say financials finna get ready to pull back down. And we see consumer discretionary starting to pick up. I believe tech gonna start to pick up too. So I'm starting to take note of that relationship between tech and financials. When tech go down, look for the pivot to something like financials. Financials start to tank, you can get ready to come back in for tech.
Right.
Mhm.
Right.
Overall though, looking at the market for the past week, most of the major indexes was down. The Dow closed, it lost 0.46%. NASDAQ lost 0.79%. And the S&P lost 0.77% over the last 5 days. So the market's still kind of down. Kind of go back to what I was saying, I think it was like a week or two ago about the dead cat bounce. It seemed like it's recovering, but it's still sitting sideways in that beat up territory for a little bit. And out on momentary green days, but it don't mean we're recovering yet. I'm expecting the recovery to start to show within the next 2 to 3 weeks. But as far as news, I also know that AMD earnings coming up. Y'all know I rock with AMD. Hopefully they'll beat these earnings again and get ready to have a performance of the year that I was expecting. That'll be 2 reports in a row because they smashed it for the first report, even though they fell off. But now they got another report coming up. Pretty sure the chip shortage is gonna have a part to play in that.
What I was just looking at. Yeah, we also had quadruple witching Friday. We had a quadruple witching day. So a lot of contracts went into expiration on Friday across the asset classes. You got stocks, the futures, all the asset classes. The four major asset classes across the market. A lot of the contracts expired. We call that quadruple witching. It happens like 4 times a year. And we just had it Friday. So usually around quadruple witching, there's a lot of increased volatility. So you want to make sure if you trading around quadruple witching, you want to do your due diligence and protect your trades using various hedges or whatever.
What are the 4 major asset classes?
Let me see. You got of course the stock market, what they call equities.
It's gonna be like stock, bond, real estate.
The bond market. The futures market. What's that? Equities,
Stock, bond, real estates, and commodities.
and I think commodities. Commodities, I think, is the 4th one. Stock index options, stock index futures, stock options, and single stock futures. Those are the 4. And they all expire on Friday. The contracts for all 4 expired Friday. That's called quadruple witching.
Now,
that's what happened Friday.
From your knowledge of quad witching, how would you play that?
I typically don't trade around quadruple witching. So, because I don't really have a quadruple witching strategy yet. So I typically tend to stay away. I stay away. Plus, the market was down. So I think Friday I just did some shopping.
Friday, I grabbed me 2 leaps.
Yeah, I was looking at some leaps. I'm looking at some leaps. Probably this week. Probably play a couple leaps, and most of the last week I just did a lot of shopping. Been averaging down on Apple. Hopefully they about to make a turn.
Yeah, I averaged down on Apple too.
It's about that time for them.
I think I went down. I took my average like three points down.
Yep. If you're interested in Apple, now is a good time. They're sitting in a good buy zone. They're at 119.
See something real quick.
I was gonna look at them Apple leaps and see about getting into that one we had.
Yeah, I was looking at the Apple leap. They sitting at 119 right now, so Apple in the buy zone right now.
Definitely. That's under the split price. They split at 125.
Yep. Yeah, they've been sitting down there for a while now. They're giving us a chance to, load the boat.
That $200 call we was playing for January 22. It's only $195 now.
Yeah.
We had bought it was up like the high
200 and something. Yeah.
Who is that? XLY?
I'm losing on that now.
Which company?
Apple.
Apple.
Oh, Apple. Yeah.
Seeing Apple do good around July.
Yeah, I'm gonna hold that joker all 4 seasons to see what it do. So it better come on.
Because typically Apple's best performing quarters are the third and the fourth quarter. So we're in the down quarter. This is where seasonality comes in. You got to know the company's seasonality. Right now, Apple's in they're in one of their weaker quarters right now, historically.
Yeah.
So that's probably a lot of plays a part into why they haven't made that move yet. But we know it's coming. Right now is the time to load the boat on Apple. If you're already in Apple, it's a good time to buy more shares, average down, lower your cost basis. Because we know Apple, they gonna take off. Once we hit the third quarter, Apple gonna start climbing. They're gonna start making that move. And once they start making that move, they're gonna be gone.
May to August, watch Apple.
And they releasing a new phone next year, the beginning of next year, the 13.
Yep.
Y'all think the same hold true for y'all think the same hold true for XLY?
Well, XLY hold, it's heavily weighted in Apple. So Apple perform well, they perform well. Tesla, they got Tesla in there, Microsoft. Right now it's kind of getting beat up because the tech is getting beat up.
That's why I'm just trying to load up on
XLY getting ready to take off too. We look forward for them through April through August.
Yeah. We've been seeing Tesla play around the 600 mark for a few weeks now. Tesla in a good buy zone. A lot of people trade Tesla. They get in and get out, but if you a long term, you hold a Tesla long term, you might want to look at picking up some Tesla right now. I think. Let me see what.
It was like $500 and something. I did not buy any. I'm definitely ashamed of myself.
It ain't gone yet. I was scalping Tesla Friday.
They're at 654 right now.
Yeah, I think they was almost $100 cheaper. I'm pretty sure it was like $568.
Yeah, that's what I bought. I bought them at $567.
Don't let that scare you from buying them, because you still got to consider the overall picture of who this is. Tesla not gonna be a $600, $700 company forever. If you grab them at 700 and they move up to 15, would you hate yourself for buying it at 700?
No, of course not.
If you waited to 800 or 900, still get in right now.
Let's talk to Brother Willie. Willie is a prime example on that.
Yep.
Made out.
My boy
Made out like a bandit.
for a while.
Yes,
I
sir.
was eating for a while. Nah, boy, I'm famished.
That's all right. We just gonna average down, brother Willie. I'm in there with you.
Yeah.
That's
What
part.
y'all don't have your crypto guru on the line?
Yeah, he's supposed to
He's
come in here and give us. He's supposed to come in here and give us some info on the crypto today.
Okay.
I saw him last night.
Yeah. Because it's been doing all right. The second been doing okay too.
Yeah, it's around 56, 58.
Mm-hmm.
It's holding above that 50.
Yeah, I want to know about that Litecoin.
Did any of y'all look into the blockchain stocks we mentioned? That's kind of like the backbone of crypto. Mara and Riot.
Riot up around, they near highs right now.
Bought some.
Entry.
We got some.
Mm-hmm.
No, we bought some.
Oh, Riot.
Um,
Oh, okay. Yeah.
Riot at 60 right now. They up there. They've been running.
Okay.
You ain't got him at what, Jermaine?
I had Riot at $9.
What?
I had Riot at $9. I rolled them all the way up to about $60, $70. I took some profits. They came back down to like in the 50s.
Mm-hmm.
I bought some more. It ran back up to like 60s in the 60s. I sold it. I took some more profit, and then it went all the way down. I got stopped out. Stopped me out of my shells. It went down like 40 something and stopped me out of all my shells.
That was a good ride.
Yeah, but I ain't take a loss. I wish I still had a position in them.
Because what you should have did was you had set your stop, but you ain't set up the limit buy to buy some more.
Yeah, that's what I should have did.
It's almost like you gotta do both. If that's a company that you want to keep riding, you gotta set up the stop loss and the limit buys.
Yeah, and then I could have picked it back up at that basement level when they stopped me out around 44, 42 or something like that.
Mm-hmm.
And I could have jumped back in and rolled it. Right now it's at 6 back up to 60. I could have rolled it back up. See, that would have been a great trade right there.
Right.
I did a quick Thinkorswim tutorial last week, and the guy was telling me about a vertical option. Y'all familiar with that?
Vertical spread options, yeah.
Yeah, the vertical spreads and stuff. Yeah.
Yeah.
Is that what Willie did a few weeks ago?
Mm-hmm.
Willie did
What type of spread you did?
I think
He did a debit spread.
Just a regular debit spread.
Oh, regular debit. Okay.
Yeah,
Okay.
debit spread. Yeah.
Okay. Yeah. I told the guy I just didn't have enough time to go all the way into it. So
yeah, that's what we're gonna eventually get into. First naked options, single leg options, then we'll get into the double leg options, the vertical spread, collars, the strangles, things like that, the different techniques, trading techniques that you can use. But we'll get there.
all right.
Anybody else seen anything in the market this week they want to talk about before we start the lesson?
I seen that they got that new ETF was come out to battle with Kathy Woods and Art. I think it's called Trust something. It's on the Trust. They're supposed to pick up all the innovative companies.
Oh, okay.
So they said that's gonna be Kathy Wood first competitor.
So okay.
But they haven't been approved yet. They just applied. They did a preliminary round with the SEC to get on the market.
We knew somebody was gonna follow suit.
Huh?
We knew somebody was gonna enter the fray and follow and be a competitor.
Yeah. So we'll just watch and see when they do hit it, see what they come in as. Might be a good one, give it a little competition.
Somebody said they want to be more innovative than Kathy.
Yeah, did y'all catch Kathy? Did y'all catch Kathy on the Come Up series?
Yeah, we called it.
Yeah.
Yes, sir.
Auntie Kathy.
I see.
What did y'all draw back from that? Because I
like her outlook. I like her outlook. I like the whole disruptive innovation thing. You know, she looking at the future.
Yeah, I like a strategy, what she's doing, what they're looking for. They're just not looking for like the next iPhone.
Right.
They're looking for something that the game changes and stuff.
That's
So,
gonna change the way we live.
right.
Mm-hmm.
Okay.
Carvana would be a great example of that. Disruptive innovation. That could revolutionize the way that we buy cars. That's what she's looking for.
Yeah.
So I'm definitely feeling that.
So as the leader of that, she has the capital to go heavy into a lot of those, right?
Oh yeah. That's an institution.
Okay.
That's a
Okay.
fund. He's just the CEO.
Yeah.
He's the founder of the fund.
Wow.
She's Bobby Axelrod with my billions. People who watch.
Okay. Cool.
All right, so we're gonna get ready to roll into the lesson for this week. with God.
We back with God for this week.
My first screen share. So y'all remember where we left off last time we was on the story or the Adventures of God?
Yeah, the last episode was on diversification. We talked about diversification. How to consider diversification when you picking your stocks, when you populating your watch list. Always keep diversification in mind to hedge against downsides of any particular sector at any given time. So this week, episode 7, we want to find out what type of investor are you? We know that in the stock world, we have investors and we have traders. There's a difference. Are you an investor or are you a trader? An investor tends to take an investor takes the long-term approach. He seeks larger returns over a longer period of time. Investors are more likely to ride out short-term losses. Long-term investors benefit from perks like interest, compounding, dividends, and stock splits. So most of us are we're aware of, how interest works and how it works against us, in the form of credit card. When you have debt, interest bills, it works against you. Well, in the stock market world, when you own assets, the interest is in reverse. The interest works for you. Interest is the way that your money grows over time. Compounding. Albert Einstein said that compounding is the 8th wonder of the world. Compounding is greatly beneficial to long-term investors. This is how your wealth is generated, through compounding. Dividends. By holding companies long-term, you benefit from regular dividend payments that companies pay out to their shareholders. Some companies do it monthly. Some companies pay out dividends quarterly. Some companies pay out dividends biannually. Some companies pay out dividends annually. Do your due diligence on the companies and see when they dividend payout dates. Dividends are a way you can generate income from holding these companies. The more stock that you have in these companies, the more shares that you own, the greater your dividend payments become. So say if you own 1,000 shares of company X, and they pay out a quarterly dividend of $1.35 a share. That's a payment that you'll get $1.35 times 1,000 just from that one company in your portfolio. That's a payment just for holding the company. And stock splits. Periodically, companies have stock splits. Last year, we saw Apple do a what? 4-to-1 stock split.
Yeah.
7-to-1, something like that. Was it 4-to-1?
One.
And then Tesla did 5-to-1.
And then we saw Tesla do a 5-to-1 stock split. So holding companies for long term, you benefit from any stock splits. If you have 10 shares of company X, and this company does a stock split, a 2-to-1 stock split, after the split, you will now own 20 shares as opposed to the 10. So this is a way you can also accumulate shares, because we know the more shares you accumulate, the faster you are to retirement. So that's the game. Accumulate as many shares as possible. Typically, we want those shares to be in good businesses, but the saying still holds true. Collect as many shares as you can. Investors, they tend to put more of an emphasis on the fundamentals. They look at the value of the companies, the balance sheets. Long-term investing is how we build generational wealth over time through all these various perks, compounding, dividends, stock splits. Over time, 10 years, 20 years, it starts to generate serious wealth, generational wealth. Those are investors. Now we have traders. Traders typically operate on shorter time frame trades. They look to maximize their returns on a daily, monthly, or quarterly basis. Traders are short term. Traders look for smaller, more frequent profits. They may be in and out of a trade in a day, a couple of days, a month, up to a year. Traders take advantage of both rising and falling markets. Traders make money whether the market's going up, down, or sideways. That's what they capitalize off of. Traders are more concerned with the technical aspect of research. Traders focus more on the charts, the price levels, the momentum, the volume. They focus more on the technical aspect of stock analysis. Trading generates income. The better you are at trading, the more money you can make on a daily basis, a weekly basis, a monthly basis. That income can then be used to purchase long-term shares so that you could build generational wealth, start the process to building generational wealth. But trading is a way that you could generate income for today, income that you can live off of. When we talk about traders, there are a few different types of traders. The first type of trader is the position trader. Position traders typically hold positions from anywhere from a few months to a year. Position traders, they tend to, we talk about leaps. Leaps is a version of long-term for traders. A leap may be anywhere from a year to 2 years. A leap option contract. That's a trade. That's a tool for traders. Next we have swing traders. Swing trading, positions are held from days to weeks. So anywhere from a couple of days to a week or a couple of weeks. That's called a swing trade. Next, we have day traders. And day trading positions are held throughout the day, or what we call intraday. That's intraday trading. Day traders don't hold positions overnight. They get in today, they get out today with their profit. They in and out. Day trading takes a little more experience and a little more skill because the risk is heightened in day trading. Typically, the shorter your time frame, the higher the risk. You want to mitigate the risk, you go longer time frame. That's why investors, they go long time frame, 10, 20 years. You know, that bring their risk level down. The further your time frame, the lower your risk. But for day traders, they work on very small time frames, so the risk is heightened. So you want to make sure you do your due diligence when you get into day trading.
My God, all maxed out by day trading, man. Look, swing trade, my boy chilling.
Yep.
Position trade, and my boy bouncing around.
What bouncing?
The day trading.
Thing get more and more serious. You got a little pressure right now. You know what I mean? You got your wrist. Now look at him down.
Oh God, I'm about to cut the loss.
We got scalp. Now we got scalp traders. We got the scalp.
What the hell felt like?
Clean.
That's tough right there.
My boy having a heart attack over here. Yeah, we got scalp traders, man. Scalp trader positions are held from seconds to minutes. Very quick, in and out. We know, got the scalp over here. She can attest. We done lost a lot of money in the amount of like that. We done made some money too. But those losses hurt, man. And they so fast. Scalp trading is high risk, high reward. This is not for the faint of heart.
That again, work out.
It's not for the faint of heart, but it's very satisfying when you trade, when you win on the trade. Ask the surgeon. All that over here making all that damn noise.
That was a good day.
That was a good day. I ain't never made $600 in an hour.
Man.
Yeah. So, other factors to consider when deciding what type of trader you are: account size. Typically, if you're working with a small account, I would advise you to be long-term invest, mitigate your risk. That's why typically when you go to these brokerage firms, they want you to have, if you're going to be a day trader, they want you to have a minimum of 25,000 in your, what, 2,500?
Man, 25,000.
25K in your account. Because the rate of return, the high risk, the high reward, you can make a lot of money and lose a lot of money quick from trading, short-term trades. So typically your account size will be a factor to consider. The time and dedication. You may not have the time to, sit in front of a computer all day. We all got to live. We 9-to-5 investors. We work. We got jobs, we got kids, we got life. A lot of people don't have the schedule to sit in front of a computer every morning. If that's not your thing, you might want to be think more long term, invest, buy and hold. You might not have the level of dedication to go over numerous charts, looking at charts and graphs all day. That just might not be your thing, but that's okay, because it's still a way for you to participate in the stock market through being a long-term investor. Level of experience. Trading is a skill. It's just like shooting a jump shot. The more you do it, the better you get at it. It takes practice and it takes experience. I would not advise someone new to the stock market to just go straight to swing trading. Go straight to day trading and scalping. I would not advise that. there's a certain level of experience you must have before getting on those type of endeavors. Personality. You just might not have the personality to sit in front of charts and watch stock prices rise and fall all day. Maybe your heart can't take all that. You can't take the volatility. Risk tolerance. Your risk tolerance is important. You know, you must gauge, your risk tolerance, your risk aversion. How much money are you willing to put on the line? How much of a risk are you willing to take to gain a reward? These are all important factors to consider when deciding what type of trader you are. So please think about it. You know your personality better than anybody else. Do your due diligence. Make your decision. Okay. Update. Y'all see my boy? My boy got them dollar signs. Y'all see my boy? Y'all know what it is. That's Stimmy. My boy woke up the other day, checked that account. He had them 14 extra 100 in there. Okay, we rocking. Godfrey has been stimulated. He now has an extra $1,400 to add to his brokerage account. How will we advise him to allocate it? Consider his watch list, investment style, sectors, industries, and diversification. Fundamental as well as technical analysis will be required. Let's help Godfrey populate his watch list before and build his portfolio.
Yes, sir. 1,400. That market on sale right now.
Now we've been giving y'all, we on episode 7. We've been giving y'all little pieces to the puzzle everywhere along the way. Episode 3, 4, 5, 6. We talked about sectors. We talked about sector rotation. We talked about the different industries. We talked about diversification. We talked about technical analysis, finding entry points, support and resistance. We talked about fundamental analysis. Everything that we have went over with Godfrey up to this point, utilize those things, and let's help Godfrey populate his watch list. These are the companies that we're going to watch. We're going to go find entries for him, and we're going to add these to his portfolio. So over time, he'll have a pretty decent watch list.
Time to put it all together. Let's eat, man. What we finna do? We got a live example. Gonna walk through.
Right. So last week, the topic of the meeting was fundamental analysis. So we kind of gave you a brief overview of fundamental analysis last week. This week, we're going to go a little deeper into fundamental analysis, and we're going to give y'all 2 examples of how to do fundamental analysis of 2 companies. We're going to go through it today together as a group. The 2 companies that we picked, we wanted to show y'all an example of the fundamentals of a great business, so we picked Apple. And then we wanted to show y'all the fundamental characteristics of a not so great business, so we picked GameStop. So that's what we'll be doing today. We're gonna chop up the numbers.
For the research today, the only 2 resources we used was the 10K and the 10Q. We gave y'all a couple other websites and stuff before, but today we only use the 10K and the 10Q. So we'll show y'all how you can use those to your advantage with just those 2 pieces of information. Then you combine them with the other websites and stuff we gave you and piece together your fundamental analysis. All right. So you want to kick it off with Apple?
Okay, I'll kick it off.
Or you want you got a screenshot? Or you got yours on a notebook?
Nah, I just got the notes.
All right.
Okay. We have Apple, ticker symbol AAPL. Apple's current price, currently at $119.99. Like we said earlier, they're in a good buy zone. Call. Apple has a market cap of just over 2 trillion. Apple has the largest company on the market per market cap. This is what we call a mega cap company. Now, a couple of episodes in Godfrey, we went over the market caps: small cap, mid cap, large cap. Apple would be considered a mega cap. The Apple sector, Apple resides in the technology sector, in the computer industry. So the sector is technology, the industry is computers. Apple has last week we talked about working capital. We discussed what working capital was, and working capital, where are my notes? Where's my notes? We discussed what working capital is. Total company assets minus total company liabilities, right? Apple's working capital is 65.3 million. They which is actually a decrease from last year's working capital of 90.4 million, which was primarily due to the COVID. You know, we understand why their working capital was down. They closed the Apple stores for like 6 months straight. So all that revenue that would have been generated, they didn't get it. EPS, we talked about EPS, earnings per share. The net income divided by all outstanding shares. This is the amount you earn for each share that you hold. Apple's EPS, Apple's basic EPS is $3.31. It's up from $2.99 a year ago. The diluted EPS is $3.28, up from $2.97 a year ago. PE ratio. The PE ratio, we talked about this last week. Price per share divided by the earnings per share. This is the premium that you pay for the current company's earnings. So the PE ratio is at 32.50. That's up from $19.79 a year ago. So we see the increases, how everything is up. The working capital was down, but we know why. Once Apple's open up all these stores again, it'll be right back up. Next, we got the debt to equity ratio. The debt to equity ratio, that's total debt divided by total equity. How much do they owe versus how much do they own? Debt to equity ratio is 4.35, up from last year's 2.80. Price/book ratio. That's the price per share divided by the book value per share. Apple's currently sitting at 30.48. That's up from 13.91 last year. So last year they were at 13.91. This year they're at 30.4. That's more than double. Other factors to consider about Apple: sales and revenue strength. Is it increasing or decreasing? Apple sales have increased on a year-over-year basis, on a quarter-over-quarter basis. Their sales are consistently increasing. We got the numbers a month ago from the iPhone 12 sales through the roof. through the roof. They also increasing their sales numbers and their market share in the wearable section with the what is called the Apple Watch.
Mm-hmm.
You know, and the MacBook. The Mac, they had great sales across the board. Debt. Is the debt increasing or decreasing? Apple's debt slightly increased over this year, but I'm not too worried about it because I'm not too worried about it because we know Apple, they can pay it off. I'll get to that in a minute. Dividends. Does the company pay dividends? This may be important if you're a dividend investor, you're a long-term investor, you're looking for dividends. This may be an important factor. Currently, does Apple pay dividends? Currently, Apple does not pay dividends. I ain't never got no money from Apple.
No.
Raggedy bitches.
Yeah, he said Apple dividends?
Who?
Oh,
Apple?
Oh, never mind. I heard
Yeah,
it.
Apple.
What is that?
Apple ain't never cut that check.
No.
Apple pay
Apple
dividend.
pay dividends. I got a dividend payment from them.
They do?
You did?
Yeah, Apple pay dividend.
Yeah.
No, I ain't never got nothing from.
I've never gotten it.
I
Right
definitely
there.
get dividends. I get dividends from Apple.
I get a dividend.
Know what
from
I'm saying?
Apple,
I
They
get
too.
my-
do pay dividends.
I'm gonna pull it up right now. Let me tell
They
you.
got just don't pay attention.
Apple, I had discriminated.
Right. Hold on. Wait.
Y'all sure?
Yeah. Wait. I ain't never.
Keep talking. I'm gonna bring it up.
That's some fundamental research I should have did. I should have already had those numbers.
For what, Apple dividend?
Yeah,
I can pull it up for you real quick.
that's me taking accountability. I apologize for that.
I got a dividend on February 12th.
Oh,
I got $1.64. You receive 0.012 shares at an average price. Yeah, I got a dividend.
Oh yeah, they do.
So
Apple does pay dividends.
their dividend amount is 20 cents a share
Mhm.
as of 2021. And 2020, it was 82 cents a share.
That
And
ain't right.
2019, it was 77 cents a share. What?
That ain't right.
How?
It was
They
down.
told me
It was
I
down.
got.
This the dividend history of Apple.
I'm gonna
They
say
cut the dividend.
they right 20 cents. Yeah.
I just
They
said
cut the
My bad, my bad.
dividend.
Yeah,
I know a
but I
lot
got
of companies cut their dividends last year because of COVID.
Yeah, I got 8 shares and they gave me $1.64.
I want to say Disney suspended their dividends altogether. I think it was Disney.
Let me see. I'm an owner of Disney too. Let me check it out.
But yeah, Apple, that's their dividend.
So typically what you want to see dividends increasing year over year.
Okay, so let's look to prior to COVID. So in 2017, their dividend was 57 cents. 2018, it increased to 63 cents. 2019, it increased to 73 and 77 cents. 2020, it increased to 82 cents. And then this year, towards the end of 2020, it went down to 20 cents.
Yeah, you see how it was increasing prior to COVID.
Right.
It was increasing. A lot of their numbers like that. If you go back and look prior to COVID, they was on an increasing pace. And then you had that one COVID year, it'll be down. And now they're going right back up to the previous levels that they was at pre-COVID.
So it'll spike back up.
Right. Apple's kind of returning to its previous pre-COVID numbers.
Yeah, Disney didn't give me no dividend.
So I was looking at like the working capital was down from a year ago. And I just attributed that to the COVID. Because prior to COVID, the working capital numbers was increasing every year. So we know that at certain times there are things what we call catalysts, reasons behind the numbers. So we know COVID was a big catalyst that affected all the companies, the entire market. So we can find, so when we see discrepancies like that, sometimes you have to go back and look at the news and find the catalyst. Why was these numbers down? Why don't these numbers match? Why were they off track this year? You have to go back and see, was it a catalyst? Other factors to consider: free cash flow. The company's free cash flow. How much cash do they have? How much cash have they generated? Do they have enough cash sitting on the side to where they can cover their debt? Or do they have to pay their debt from the working capital? This is a factor to consider. Apple in particular has $195 billion in free cash. That's why I said earlier, they debt slightly increased, but I'm not concerned about that because they got $195 billion sitting over here to the side. That's why Apple was able to close their stores down for a whole half of a year. They can take the brunt of that because they have 195 Bs sitting over here in the sock drawer, in the Nike shoe box. Another factor to consider: moats. Moats is a company's economic protection from any competitors. When you think about moats, you think about back in the medieval times, you think about a castle. The castles would always have what they call the moat around it, a ring of water. You got to swim across to get to the castle. That's to keep intruders out. That's a deterrent to keep your competition from storming the castle. So in the economic world, we have what we call moats. Sometimes the moats can be economic, like we just talked about. Apple with $195 billion free cash flow. That's an economic moat. That's a moat right there. If Apple want to venture into another sector, like they trying to get into cars, they don't have to take on more debt to venture on, to go on your block and make money. I can set up shop on your block. I got 195 Bs to set up a shop on your block now. Now I'm on the car maker block, and I ain't have to take on no debt. I can allocate more money to my R&D department, our staff of engineers, so that we can always stay on the cutting edge of the new technology. We spend more money on R&D than any of our competitors. That's an economic moat. Excuse me. Another moat, a switching moat. What we call a switching moat. You have an Apple product, you have an Apple iPhone. 9 times out of 10, you got the Apple Watch to go with it. 9 times out of 10, you got the Apple iPod, AirPods, or whatever it is. And at your house, you use an Apple iPad or Apple MacBook. Typically, Apple users, they have more than one products and they have them all integrated. So for me personally, I'm an Apple user. I use an iPhone, I use an iPad, I use a MacBook. For me to switch from Apple to Samsung, I have to switch everything. And typically consumers don't want to do that. I'm Apple, I'm gonna stay rocking Apple. That's what I do. All my products Apple. I'm investing in Apple. That's how I'm rocking.
They did a study, I think a few years ago, and it was like 90, it was a high number, like 97, 98% of every home in America has at least one Apple product.
Mm-hmm. Yep.
I have a general question about what you just said about the Apple integration that you have going on. Do you feel that it's best if you own an iPhone to buy a MacBook instead of like an HP?
Yeah.
For what we're doing?
Yep.
Okay.
Because I can download a file to my MacBook and it automatically go to my iPhone too. And it's gonna look the same.
iPad, everything.
Yeah, I can receive a file that it'll go to my MacBook, my iPad, and my iPhone. Whatever device I'm on, I can pull up that file.
Message or anything.
Seamlessly. I ain't gotta add another app, a third-party app to, you know what I mean? None of that.
Oh, so any kind of document that you put on your MacBook. Got
Right.
it.
I can airdrop that episode of Godfrey we just did. My girl sitting right here, Sean sitting right here. I can airdrop it to her phone.
Got it.
It's already integrated. You can use an HP, but then it's the integration thing. You know, you might have to get another app to run this.
Or just send
This
everything.
this program. You got to get in an iOS form. Find an app that can convert it, like PowerPoint.
Okay, got it.
So and typically people don't want to do that, so they'll just go get a Mac. I got an iPhone. I get a MacBook.
Got
You
it.
know how we is. We like everything matching.
Yeah.
I'm iPhone down. We like to be.
Well, I need to invest in a laptop so I can start charting. And I was just curious if I should try to cut corners with cost or if I should just invest.
You got an Apple phone?
Yeah.
Yeah. Yeah, we got a MacBook, but me personally, I like the Surface Pro.
What's that?
Microsoft.
That's Microsoft.
Okay.
See, it's that integration thing. We went with the MacBook because we got Apple. We paid the premium because Apple, the MacBook is hundreds of dollars more than the Surface Pro. But people will pay that extra $400-$500 just to get a MacBook to match their iPhone.
Okay.
That's what we call a switching mode. It's very hard for consumers to switch over from Apple to Samsung. I did it. I used to be Team Samsung. And my first iPhone, I was like, man, what the fuck is this? I don't know how to do nothing. But once I learned, I was like, okay, I got it now. Now I don't see myself going back.
Apple
is gonna change from an Intel to an Apple chip.
Yeah, I think they already did.
Okay.
The iPhone 12 running their chip. Excuse me. But
there's also Apple TV as well.
That's another thing. Now they into the subscription-based services. See, Apple got enough. They got enough clout and enough money. They could set up shop on your block, but you can't come on their block. You ain't got the clout to come on our block, but I can go on your block and set up a shop and make money on your corner.
And they talking about an Apple car.
Yep. You see, they set up shop. They get territory on your block, his block, they block. They everywhere. But they can do that because they big dog.
Yeah, that's why I never switched over to Apple. I've been with Android for so long.
It's a process.
Like I'm in a whole nother country.
Yep, it's a whole process. It took me maybe probably about a month, 2 weeks to a month to figure out all the features and how there's no back button. That was the whole thing. Hold on, how you go back? How you screenshot? All that, it's a process, man.
Even with a MacBook, it's like you don't have Internet Explorer, it's Safari.
Yeah.
Don't like, and I kept wondering, like, what the hell is this Safari shit? I'm like, oh, that's how you browse the internet. Okay. Yeah, that's.
Yeah, I
got me a Surface Pro. Oh,
I grew up on Dell. I came up on Dell. I be struggling over here with this MacBook. How you switch the screen, go back to the screen I wanted to see? I don't be knowing none of that.
I like it.
Yeah, I like it.
Used to it.
You got
pull up the multiple screens.
So it's on me now.
It's definitely a learning curve.
It's a learning curve. I'll tell you that. But that was Apple. That was the fundamental research on Apple.
All right. So I had GameStop.
Let me look at this Bible.
I'm gonna pull up the screenshot for y'all.
Fundamental analysis, verse 1, chapter 1. What's going on?
Here you go.
I got the other pair of notes over here.
Yeah, you got still the Bible. I'll be like the book of Eli around here.
Right?
Way too much.
Yeah, no.
All right, so I went to bar chart. Let's walk back through it real quick. I'll go to bar chart. GameStop.
Oh, Jimmy.
Scroll down. So this how y'all can find the reports on bar chart. Scroll down, you go over here to SEC filings. What I want to go to first is the 10K. So I'm gonna click drop down, annual 10K report.
Annual report, I know that. TQ's quarter.
Then you open the PDF. And now we're here. So first part, most of y'all already know about the business of what GameStop is and what they do. I did see something interesting in here that I didn't know about. Was that Gamer Informer was a magazine. Gamer Informer is the magazine they got, and they got a couple other segments as far as how they generate revenue. That was kind of new to me. But so basically when you come in here, you read the business description, scroll down, they tell you about their store locations. It's the magazine right here, Game Informer, tell you about that. They vendors, let you know about that. How they distribution set up, who their competitors are, market size, the seasonality. But we're gonna scroll past all of that. They go into some of the risk factors. I did scroll, run down this, and I seen that a lot of statements about the risk for GameStop was already some of the stuff we pointed to when it comes to the sales of the consoles and people not really trading in games. All the stuff that went digital. They tell you right here. Technological advances in the delivery and types of video games and PC entertainment hardware and software, as well as changes in consumer behavior related to these new technologies, may have and may continue to lower their sales. So they let you know that's a red flag, and they go into detail about that. They also let you know that they're currently behind, and if we fail to keep pace, that's going to negatively impact the business. Pressure from competitors, blah, blah, blah. We're going to roll to the financial part. So selected financial data. When we get here, as we can see, it started in 2015 and it got up to 2019. This is a 2020 report. So we look at the net sales and they tell you right here it's expressed in millions, except for the statistical and the per share data. So in 2019, it was at 9 mil. 2015, it was at 9 mil. 2016, 7 mil. Went to 8, 8 again, then it dropped to 6. Now we're going to the net loss of income from continuing operations. That was 379. You can see went down to 2 and it started to come up. They started incurring losses. Sales was okay in 18, but they started to decrease again in 19. Dividends, I don't really believe GameStop pay dividend. So then we go down to the assets, debt, and liability. 2015, we look at their assets. Assets, 4 mil. close to 5, hit 5, fell back down to 4, went at half to 2, well, almost 3. The debt, not too bad. Right here, it get real heavy. Then not so bad right here. Liabilities, pretty much the same. Nothing major. 2.2, 2.7, 2.8.
So if we looking at, if we just take the total assets
Right.
from what's that, 2015 up until now?
2015 to 2019.
Okay, now look at those numbers for the 4 years. Are those numbers increasing, decreasing, or pretty much staying the same?
I see a decrease if you go start to finish.
Mm-hmm.
It kind of stayed the same. Then it had a downturn right here.
So, and this is pre-COVID now.
Yeah.
This is pre-COVID. So that 2019, see how it dropped all the way to 2.8?
2.8.
That right there, that wasn't COVID.
Nope.
That's around the time you start being able to buy those games online.
Yep.
Digital.
Yep.
And now if you look at the top versus the bottom, that's a small ass gap. Your assets 2.8, your liabilities 2.2.
Yep. Yep. You got about 600 to play with.
That ain't nothing. All right. So then they go down into the MBA management, talk about the financials. I missed the fiscal part. Let me see where that's at. Inside of here, they also give you the breakdown of how they operated from fiscal year to fiscal, however you pronounce it.
Yeah,
Fiscal year to fiscal year. But right now, this from the result of operations. You can see the net sales, cost of sales, and gross profit. So 2017 gross profit was around 2 million. 2018, another 2 million. Well, it went from 2.4 to 2.3.
Yep.
Then we come to 2019, now it's 1.9. So again, we see it's decreasing, and this is from operations. Net sales is decreasing.
Mm-hmm.
The amount in net sales they had in 17 was 8 mil, 8.2 mil, then it fell down to 6.4.
Mm-hmm.
And it's not moving fast. Okay, now here we're gonna break down how they categorize their revenue right here. They got hardware and accessories, software, and collectibles. So 2017, the hardware and accessories was 3.6 mil. 2018, 3.7 mil. 2019 dropped down to 2.7 mil. God damn, that's a deal. Software.
That's games, that's the physical games, physical consoles, controllers, things like that they sell in GameStop.
Yep. Then we got the software. That went from 4.2 mil, 3.8 mil, and it fell from 3.8 mil to almost 3 even. See another decrease in sales. Hardware down, software down, collectibles. Go 638, 711, 737. So collectibles seem to be keeping them up a little bit.
That's the only thing keeping. When you go in a GameStop store, anybody who ever been in GameStop, you know they don't just sell games and controls and stuff. They have collectible items in their dolls and Pokemons and things like that. Those are the only thing that's selling out of GameStop stores, and it's not enough to keep that business afloat.
That's not the primary focus of this business.
Right. This is a gaming store. that's making the majority of his money off collectibles. That don't add up.
They better digitize them things and put them as an NFT.
Start selling NFTs in there.
Yeah, that could be an option for them. Yeah, they'll boom, man.
Yep.
Maybe that's why people still buying into them after all that shit. They might think they finna get into NFTs with their collectibles.
Well, you know, they just added the CEO of Chewy to their board in January.
Yeah, I
Supposed to
seen
be overhauling the
CNBC.
business model.
Okay.
So
Yeah,
keep an eye on GameStop.
And the Red founder.
he said he believed that he can bring GameStop back.
Oh, I didn't know.
He confident that he could change the business model and make them a profitable business. So we'll keep an eye on them and track them and see see how he does. I don't know. We'll see.
Yes, sir. Looking at sales by region, you know, I scrolled past it at the top. They was talking about all the countries where they stores at. Well, here go how they performed in these countries. In the U.S., net sales for 2017 was 5.8 mil. 2018 still 5.8. 2019 dropped down to 4.4. Canada sales already weak as hell. 434. 434, then it dropped down to 344. Australia, 702, 645 to 525, declining all the way through. Europe, 1.5, 1.4, and 1, almost 1 even. So everywhere that they sell is going down.
Across the board.
Another bad sign. Okay, that's what I was looking for. Then they give you a summary of what we just looked at. If you ain't want to go through the numbers, just read the paragraphs real quick. Net sales from 2019 to 2018 fiscal year, net sales decreased 1.8 mil or 22% in 2019. Then it tell you the decrease in net sales was primarily attributable to a decrease in comparable store sales of 19.4% and the impact of 321 net global store closures. So before COVID even hit, they had 321 stores closed across the globe.
Already closing stores down.
Then they also had the decrease in comparable store sales was primarily driven by lower demand for the current generation consoles from Sony and Microsoft as they near the end of their console cycle. So I guess what it is, the new gen that you got, the 5 and the 1S, what it is?
PS5.
Yeah, the PS5 and what's the Xbox? The new Xbox.
I think the Xbox One. Yeah, the Xbox One and the PS5, the next gen models.
The next gen models, they ain't really in GameStop like that, so they got all the old ones. Them is what they categorize as comparable store sales. That's what they still holding on to, and them sales being down because they getting ready to end they cycle. People going into the new consoles now.
And people and you know, GameStop may only get 2 at a time. Yep. Walmart may get 20. So people who's buying these next gen consoles, they primarily buying them from Walmart, Best Buy, and then GameStop bringing up the rear. So they're not even making a lot of money off of those.
Yeah, they even let Target come through and shine.
Yep. And then with these next gen consoles, the games are now actually they digital. It's not a physical disc.
Right.
So you're buying the game from the marketplace, the PlayStation marketplace, the Xbox marketplace. You no longer have to go inside the physical brick and mortar GameStop to buy the disc. You can just download it right there from the comfort of your home, and the game and you get to play the game. So this is a big factor to the decreased sales and the decreased foot traffic that's coming in GameStop.
Because I remember, Jermaine, there used to be a time when you used to be down there in that GameStop line overnight waiting to buy
all the time. 12 o'clock. You know what I'm saying? The game come out. It released at 12 o'clock and midnight. And GameStop used to be the only store in the mall open.
Like it used to be out there like a Jordan release party.
Yep. And all the gamers from all everywhere, all around will congregate. You know that GameStop will make a big deal. They have hot dogs and refreshments for you. You know, but that's no longer necessary.
Okay, so this just came to me when you just talked about the Jordan release party. You ever think that maybe they'll stop selling physical shoes and only sell the digital design, and when you have a 3D printer, you then print up the shoe?
Yeah.
That might be some.
And y'all get print.
That's definitely coming.
That might be something.
Hey, that's
those 3D printers.
Nat, where the hell you got that out there from?
Readily available.
No, that just came to me. I swear, when Sis just said that about how Jermaine was standing in line at GameStop, and then earlier we was talking about the NFTs. I'm thinking, damn, what if they stop? Because I'm like, it's gonna be some. I know brick and mortar dying, but it's just gonna be some shit you still got to go to the store and buy. No, you don't. What if they just only sell you? And that way, because a lot of the times, like with designer bags or designer shoes and stuff, there's a lot of fakes out there. Like people be trying to make them, but it don't be the real
fabricators.
thing. Yeah, so they turn around and sell you the digital one that's NFT,
or maybe
ultimately, and then you print it on your 3D printer.
Well, maybe if when you buy your digital design, you send that, you'll be able to submit that to the company to make the shoe for you. But you can only get it made if you have the actual NFT.
Correct.
But do you know how much that NFT gonna sell for if it's a one of a kind?
Ain't no price. No
so
price.
People, you didn't even go. First of all, you're gonna buy the design, you're gonna get the shoe made, and you're never gonna wear the shoe. You're just gonna put it up.
But it's like, but it ain't gonna be. I don't think it's just gonna be a one of a kind thing. So like some of the NFTs, it's with the blockchain. It's like, okay, boom, it's 100 of them.
Yeah, they might. Yeah,
but you 500 of them.
You'll be able to control how many it is. Now, if you only put 10 out there, that's gonna make it rare. That's gonna drive the price up.
Yep.
Yeah.
I only got 5 copies of this Jordan.
Yeah.
You're gonna be walking around in some more Jordans.
Yeah, so you really could put Godfrey in an NFT and be like, listen, this designer Godfrey, we only selling 100 of them.
Yeah, we're gonna make Godfrey NFT. Make it exclusive. Drive the price up. Somebody gonna pay us $60K for a picture of Godfrey.
Amen to Sunday service.
Yep.
That's right.
Hey.
Yeah, that NFT is game changer.
Yeah.
But but we see GameStop.
It's still everything we've seen so far from them was decreasing. Gross profit. Decreasing. If we go down to that gross profit, because even up in this section, they just talking about how it decreased across the different countries that they in. We've seen that already. Gross profit decreased 399.4 million, or 17.3% in 2019 compared to 2018.
Well, so this is the 10K report. Every company has one. This report will tell you everything that's going on with that company. These paragraphs is all those numbers that we saw earlier, just in word form.
Right. They might tell you why it fell a little bit and give you a little explanation of what happened.
Yeah, give you a little more insight. So if you the type you like to read, you like to nerd out on stuff like this, you can, read over it and get a little more insight into the company. And these reports, usually, they always give what we call guidance. What's the company's outlook for the next year, the upcoming year? Do they have any new products coming out, any new services, any new features that they may come out with? Companies usually tend to give what they call guidance in their reports. The yearly reports, the quarterly reports, they'll give guidance.
And it's the 10Q, basically the same thing. It's the quarterly report. The one I did first was the annual, to give you a quarterly breakdown of how everything was falling apart. No need to beat a dead horse though.
Mhm. But we see just from the financials, the fundamentals of GameStop, they're a little shaky. You see, they've been decreasing steadily on a decline year over year. It's almost like if LeBron James averaged 30 points in 2015, then in 2016 he averaged 27 points. Then in 2017 he averaged 25 points. And then here we are in 2019, he's sitting at 19 points a game. You can see that his impact on the game is decreasing. Would you pay him a max contract?
Never.
Yes.
I know you was gonna say that.
Yeah. Because you can't judge it by that. You got to understand, okay, what is the team focus? How else does he impact the game?
Oh, okay.
You know, he don't
So
just
now,
impact. He don't know he's not just a scorer. He's not a Carmelo. Once Melo stops scoring, he's nothing no more. He's off the bench.
He could do it all. Booby
Exactly.
yeah, but if
he
we
could
see,
go,
yeah,
he
but
could
if we
shoot.
see, but if we see LeBron James numbers decreasing across the board,
Across the board, then okay. Nah.
not only is his scoring down, rebounds, assists, all his numbers are decreasing.
Oh, you said points though, but all the numbers, then yeah, you have a point.
Yeah, but I mean, if we looking at GameStop, we was looking across the board. All their numbers was decreasing. So it'd be like LeBron James, all his numbers are decreasing year over year. That's telling you that his game is declining. It's on the decline. His best years are behind him. Would you want to invest in your future in a player that's on the decline?
Nah.
It's the same thing with these companies. When you look at these numbers, these are the stats. If those stats are decreasing, then maybe that's an indicator of that company's best years being behind them. Now, we could look at other factors. We kind of touched upon it with GameStop, some of those other factors, which look like problems for GameStop. We talked about moats earlier. Where is GameStop's moat? What is protecting them from competitors? We talked about their lack of moats earlier. We see, like we talked about, people not buying the games no more. They download them straight to their console. That's another competitor cutting in on GameStop's territory. They didn't have a moat to protect against that. They don't have a lot of cash flow. They don't have a lot of working capital. They don't have an economic moat. They don't have a switching moat. It's not like, oh, I buy my games from GameStop and that's the only place I buy them from. They used to have that when they had you could trade the games in. Right. And get money off. That was something that only they were doing. You couldn't do that at Walmart. That's why I never bought my games at Walmart. I always went to GameStop because I take my old games that I'm not playing no more, trade them in, and get money off on a new game. Yeah. That was a moat that they had.
During the time, that was a great model.
Right. That was their business model, and that's what they built their success off of, because that was a moat. But now that moat has dried up because we're not buying the physical game no more. No physical game is no game to trade in.
But yeah, back to the
consoles basically outdated their business model now. The consoles
technology, right?
Yeah,
right.
Well, yeah, like
it
back,
them obsolete.
But yeah, back to like the sports analogy. I mean, you can reinvent your game and adapt. So why is it that GameStop can't get as many consoles of the PS5? You say Walmart get like 20, they probably get about 5. Why can't GameStop invest more in being able to buy more consoles and switch to digital so they can reinvent themselves in a way?
Well, you got to look at their working capital.
It sounds like to me that they stubborn. They look. I see a stubborn athlete who can't dunk no more, but he trying to dunk on everybody and he ain't got it no more. But he didn't develop a shot. You know what I'm saying?
Well, if you can look at their free cash flow. Who got more cash on hand, Walmart or GameStop?
Walmart.
So Walmart can afford to buy more consoles from Sony.
But then,
But it's like, damn, your money that bad, you can't get 20 consoles.
it's not even all about money. Sometimes it's about relationships. Think about how long Walmart been selling games, even before GameStop came out 2015. So they wasn't around with the Nintendos and the original PlayStations and the Sega Genesis. Walmart been doing this. So they have these relationships with these companies to where you've been around me for this long. And I know people coming to Walmart. Walmart ain't never stopped selling it.
And Sony looking at the business models of GameStop just like we is too.
Right.
They looking at it, they saying, well, Walmart on every corner. They open up a Walmart every time I look up, but GameStop, they closing stores down. So I can sell more of my product through my relationship with Walmart, building a relationship with Walmart, than I could with GameStop moving forward.
And nothing for nothing, but when GameStop came out, like, just this is hindsight, you kind of looking at like, okay, boom, people don't buy physical games anymore. But how long before then did people stop buying physical CDs?
Yeah.
You know what I'm saying? Like, people been stopped buying physical CDs, so it was already going. So they was just kind of hot for a minute.
It was inevitable.
Yeah, it was coming.
Yeah.
Yep.
I think
what last time I bought a CD.
What GameStop probably should have did was they probably should have got contracts with like EA Sports and all these people to where they sold the digital. Like when you log into PlayStation, you put in a code that you get from GameStop to download that game. But PlayStation and Xbox probably beat them to it. Like y'all can just buy it directly from my Play Store.
Yeah. And see it, and back to the basketball, the LeBron analogy. Okay, imagine his numbers they decreased across the board, but now at the same time, you got a younger player. You got a Zion. He coming. His numbers increasing. His trajectory going up. So you got to look at the competition too. So even if LeBron do add that jump shot or whatever to his game, he's still not impacting at the rate that Zion is at the trajectory that Zion going. LeBron on the downturn, and you have not only Zion, but 3, 4, 5 other players that's on the way up. That's the situation GameStop in. Not only have they lost a little bit off of their game, but their competitors have gained a step. So it's that much more difficult for them to reclaim their position. You know what I'm saying? Because though the other competitors ain't gonna let up on them. They gonna kick them. Why they down? It's inevitable.
So, any questions on how we go over the 10K or the 10Q, or what things you should look for when you're breaking down the 10Q report or the 10K?
And that'll be something I add to my notebook.
Yeah, it's almost cut and dry. Like you already know you don't want to invest in a company that ain't performing.
Right.
So right. Now GameStop in particular, right? This is a special situation. Because what we see with GameStop, the stock price is not reflecting the fundamentals. So we see the prices being inflated by the Reddit crew, social media, however you want to say it. It's being inflated by being a meme stock, but it's nothing behind that. The value is not behind that to justify that share price. So we don't want to fall into the trap of thinking that just because we see the price of GameStop going up, that this is a good long-term investment. This is why you have to look at the fundamentals, because sometimes just looking at the share price, it'll trick you. And you will get caught up in a trap.
Yeah, GameStop is for the traders, not for the investors.
Right. It's not a long-term stock.
So it's a well-educated guess to assume that GameStop is dead.
It's not dead because, like she said, it's a trade, not an investment.
at this moment.
Yeah, like you're not gonna hold on to GameStop for 20 years and expect for that to be what you get paid dividends off of, and
Yeah,
expect
you
that
see
that's
that.
what's gonna get you a couple $100,000 by the time you turn 60. It ain't gonna be GameStop.
Well, from an investor standpoint, a long-term investor, if I'm that, then to me they dead because that's what I'm looking to do. You know what I'm
Oh
saying?
yeah, they'll be
Yeah.
dead. You're not looking to trade them. I wouldn't even touch them. I
Right.
wouldn't waste time on them.
Now, if you want to invest
other
in them, I
great
got some
companies.
shares of Hertz that I can sell you.
Yeah, exactly.
Nah, I'm
Exactly.
good on that.
Yep. But this is how we see. This is how we differentiate tradable stocks and good investments.
Right.
You got to look at the fundamentals of a company. The fundamentals bad, I ain't touching that. There's so many other companies out here with great fundamentals. So many other great businesses. I ain't gonna waste time messing around with a GameStop, holding on to shares, thinking I'm finna build generational wealth through GameStop. That's a dime business.
So do not be scared of fundamental research. We just did it. It ain't nothing crazy, super hard. It do take a little time, but it's worth it. We investors.
It's worth it. If you don't learn nothing else in life, financial literacy, it's worth the trip. It's worth the trip down this rabbit hole. It's a lot of other rabbit holes you can be wasting time going down and they ain't gonna give you no value. But this rabbit hole right here, you're gonna get value out of it.
So with Godfrey and his 1,400, what's the conversation gonna be like? What we finna do? How much should we put on the market?
Oh yeah, let's chop it up.
I say a stack.
I say 700.
Yeah, easy.
Then Willis say 7. Mark, how much you say?
I say 7, unless he feeling bullish. I might take a little risk, go about 950.
I say 1,000.
Oh, make it 1,000.
I say
I
1,000.
like that Bow Wow.
I think 1,000 because
Yeah.
the market on sale right
put that
now.
Bow Wow on that, man.
Yeah.
And then not only that, Godfrey been doing good. You know what I'm saying? He been waiting, listening,
Right.
reading, watching. He ready.
You ready?
Mm-hmm.
But Godfrey might want to take a trip, dude.
Now he already did.
This ain't for vacation. This ain't Godfrey on vacation.
Listen, last week, Godfrey was on vacation last week with his family. He came back this week ready to invest.
Cause he got a taste of
We got an income taxes too now.
Well, shit, since we bullish, go for the 1,200. 1,200.
Yeah, we're gonna trade his next one. He's gonna trade for that vacation.
Yeah, that could be a goal.
Yeah, we're trying to send Godfrey on a nice trip.
I think we should go with 1,000.
I voted Bow Wow.
Throw that
1,000.
throw 1,200 on there, man.
I say 1,000.
I say throw a G on there, man. Hold on to that 4. Might need that to bail yourself out on, you know.
Yeah.
So
that Wow, we might could play Godfrey or option.
You hear me?
You always got a little bit of the buying power for the just in case.
Yeah, we gotta have some dry powder now, like my boy Chris Sain said. We gotta have some dry powder on the side.
Oh, I got a suggestion for that dry powder play. MGC.
Yeah.
Set it in there until we decide wherever we're gonna make our next play at.
Yep. I got
MGC.
I got GSAT. I got 200 shares of GSAT. Hey, and just sitting to the side, let that grow a little bit. Take my little profit and go up some.
You know, cover call that boy?
Yep. Yes, sir. Get on them cover call, maybe write me a couple contracts every week. You know how you boy do. You know what I'm talking about.
Oh, yeah. Oh, Darius got something to say before we wrap it up. Remember?
What?
MGC might do something.
Oh, hey, we done made it to a month, man. We got some comments on the YouTube.
Oh, yeah.
Oh, yeah.
Got some comments on there?
Yes, sir.
I'm like, ooh, wee.
Okay.
What's up?
We got some feedback.
All right, from fundamentals, the one we did last week, we got one comment.
What is
Okay.
it?
They say, this is great info, guys. Keep it up. That was a dope presentation from that Mr. Pharaoh guy.
Hey, I'm already getting shout out.
Oh,
Already?
Sis, you the
Hey.
one who wanted to bring up the comments.
oh my goodness.
Oh,
All right,
You
let's
got
see
it,
what we got on the next one. We got one more comment.
No, that ain't the one. Is it?
No, that ain't the one.
I think it's that one.
Oh,
that
yeah, we
one.
got a comment. This video has been very informative. You guys are amazing.
that's what's up.
Right.
That's what's up.
Yeah, that's all
That's
right.
what's up. For our YouTube family, you know, feel free to comment. You know, any questions, you know, hit us up, man. Make sure
You might as well
like
shout
us.
out your individual Facebooks and the group Facebook on here so people can start following the investor.
Like, subscribe, and share.
That's right. Hit
Right,
that like
right.
button, hit that airplane.
Hi
gonna
guys,
stick
welcome
that-
back to another episode.
I'm
You're
saying
back.
though, tell them where to follow you on Facebook.
Right. You know, I'm Mr. Legendary _92. You can find me on Instagram. You know what I'm saying? Hit your boy up. That's Mr. Legendary _92.
I said Facebook, the 9 to 5 investor group.
Oh, and the 9 to 5 Investor Group. That's right. Shout out the 9 to 5 Investor Group on Facebook. Our Facebook, you know what I'm saying? Our Facebook family. You know, find us on Facebook, the 9 to 5 Investors. You know, go into groups, search 9 to 5 Investors. That's 9-5 Investors.
And we also gonna drop the link to our Discord. chat.
Right. The one and only. Don't go to them fake pages now. Not them fake 9 to 5. Say 9TO5 and all that. Nah, 9 to 5 Investors.
You know
for
you're in the right spot when you see that shield.
When you see that shield, when you see this right here,
Yeah, show us your stuff, Jermaine. What do you got?
when you see that right there, you see Godfrey. When you type it in and you see the picture, that's what you'll
y'all
see.
see Godfrey and like
There you go.
Yep. 9 to 5 Investors. But for our YouTube family, yeah, go on, hit the like button, subscribe to the channel. You know, feel free to send your comments, your questions, or whatever.
we have merch coming soon.
Yeah, we're gonna be setting
And
up.
and let them know how they could join the group for a
Discord,
cost.
we got a Discord group. You can join the Discord chat. We need to put all that in the link in the description. The links to the Discord, the link to the Facebook group, and all that.
We're gonna get
What
that
about
piece
joining the
together,
Zoom?
y'all. What about who?
That's in
What about them
Discord.
joining the
That's in
Zoom?
Discord.
Yeah,
You get in the Discord, you get the link to the Zoom.
Yeah, and that's how you also get in with the OT, the overtime channel, the premium channel we got. Where we get in with the technical analysis, the charts, the weekly discussions, and all that.
Oh, I got some. Ooh,
I don't think I'm in the OT group.
I got some good stuff for the OT, man.
You say you ain't in the OT?
I ain't in the OT.
Oh, I have to make a call after this. After we cut this off.
Yeah, look to your left or to your
What?
right, whichever. Yeah. Why I ain't in the OT?
They got nothing to do with me. We talk about it all the time.
Yep. The OT is premium membership.
So for this 1,000 though, how we gonna spread it? Or we gonna have that discussion next week?
Yeah, that's gonna be for next week. Like we say, we gotta come up with companies, few more companies to add to his watch list. And then next week we'll get into some support and resistance zones, do a little charting, find some entry points, maybe set up some.
Do we think Apple's still gonna be on sale?
Ooh, I hope so.
Yeah.
I
Possibly.
think we need to make an executive decision to go ahead and buy him some Apple tomorrow.
I agree.
How much you got in his buying power right now?
Because he already got money in his buying power before he got his money. Before he got his money.
How much he got in his buying power? We can get him like 2 shares and then see what happens.
2.
I don't know how much he got. That's why I said 2.
Well, Jermaine gotta pull it up.
Yeah, he can only buy like maybe 2.
See that?
Maybe 3.
He'll be all right. Get them 2. Then we'll put that thou wow on there. And
So can we buy him enough?
I might get a leap instead of them shares.
However many he can afford without touching his new money?
Yeah, he can buy 3 right now before the statement. He can buy 3 shares of Apple.
So are we in agreement for him to buy the 3?
Yep.
Yeah.
All right, we can do that.
So I
We
set up
don't want him to miss the sale.
Yeah,
Right.
so I set up the buy for Monday morning for him to buy 3 shares of Apple. And then he'll still have 1,000. He'll still have 1,000 in his account.
Mhm.
Dry powder that we'll chop up next week.
All right, y'all. It's been another good Sunday service. We're gonna get ready to end it for this week. We'll holler at y'all next week.
Yeah.
All right, y'all.
9 to 5
Enjoy
investors.
your day.
Legendary.
All
All
right.
right.
Y'all.